Hello everyone, hope you've been well. Welcome back. As on schedule, it's been about 2 weeks since we last did a portfolio update, so today we're going to see how the last couple weeks have gone for the portfolio. We'll also talk a little bit about the financial news that's happened and what is currently moving the markets. So here we've got the portfolio in both the Canadian and US dollar again. As you can see, a couple things to note right off the bat. I just recently contributed $22.50 into my US portfolio this past Thursday, the 21st. So I am itching to put that to work, hopefully on Monday or Tuesday. As you can see here, the US portfolio has been increasing pretty nicely. From 81,465, we're up to about 90,000 at market close on Friday. For the Canadian side, what was originally a nice trend up has actually reversed, and we're actually down quite a bit as far as percentage points over the last couple weeks. If you take out the 2250, we're roughly about 6,500 up on the US dollars here. So on a percentage basis, we're looking at roughly an 8% gain on the US dollar portfolio and just over a 1% gain on the Canadian dollar portfolio. For February, I'll likely be adding Canadian into my portfolio to continue topping it up and probably buying some more Canadian companies on these dips. I mean, these ups and downs are certainly very much expected, and they haven't affected my market outlook in the slightest. When investing in stocks, it's extremely important to make sure that you're buying and holding onto the good companies that you've researched, regardless of what the market is doing at that time. No one can really predict whether the market is going to be up or down in the next 24 hours or even the next 6 months. But when you take a long-term time horizon perspective, we're talking 5 years, 10 years, 20 years, that's when you can really capitalize to see if you're making good investments rather than short-term speculation. Pulling up the graphs, you can see on the Canadian side, it trended upward steeply, mostly due to the contribution. And then now we're starting to reverse the other direction. Hopefully we'd like to see that reverse back again and go up into the right, but it would not shock me in the slightest if this continued to be choppy going forward. Oil has really taken quite a bit of a dip, and we'll kind of talk about that when we get into the financial news, but that's certainly something that's certainly affecting the Canadian economy. And I will say from a proficiency perspective, my experience in the Canadian markets, even though I'm from Canada, is significantly less than the US market, just because usually when you think stock market investing, you think US. And so ever since, I've started investing, it's usually mainly been focused on the US side of things. I've only really started dabbling into the Canadian side this year with this portfolio. So I'm really building this from the ground up. Going over to the US side, no surprise, you can see a nice steep incline, which is great to see. Now, flipping over to my portfolio to see what's changed over the last couple weeks, there's a couple notable things that I've done. So number one, you can see I've completely deleted my blue chip portfolio. I've basically just merged it with my growth portfolio. And reason being, I've basically already sold out of 3 to 4 positions, all at a profit, but I've decided to focus more on the growth stocks. The other reason is I still see a lot of growth potential in these blue chip holdings that I'm holding on to, so it felt disingenuous to not put it under a growth banner. So in reviewing what's been a couple of the driving factors for growth the last couple weeks, I'd point to Appian, which you can see here. I actually covered the last portfolio update. It's grown very significantly over the last couple weeks. I started with $156. We're up about 10 to 20% over the last couple weeks alone, which is just insane. I wouldn't be surprised if this pulled back since it's gone up significantly, a little bit too fast. And actually, a good case for that is Lemonade. This stock shot up the last couple weeks. At one point, in between filmings, this was up at about $180, and it was a 50 to 70% increase. And I actually sold about 5 shares at a profit, just because I did think it was a little too crazy. I will be buying those 5 shares back. We're at about 153 now. I wouldn't be too surprised if it continued pulling back a little bit more, but I'll definitely get back in with those 5 shares. But I decided to make a little bit of a quick buck on that. The other one besides Appian, Taiwan Semiconductor, they've had a really good earnings report, a really good forecast for the future, and really importantly, they're increasing their operational spending and capital expenditure spending by a lot for 2021. What that signals to me is that they are really invested in growing their operational capability, which in turn should increase their top line and bottom line growth. Last one we've got here is Telehealth, which I actually really like this company. I'll go into it a little bit today because it's, it wouldn't be surprising if a lot of you haven't heard of this company before. So I'll do a bit of a deeper dive into this today. So I'll let them talk about themselves a little bit here with their lovely ad on the very first page here.
There is nothing more personal than our health, unique to each of us. It guides how we live, thrive, face adversity, and the way we manage our health continues to evolve in today's increasingly dynamic world. A world that demands personalized care across a full spectrum of health and well-being. Telehealth is making it possible with whole-person virtual care. Combining technology and trusted expertise to connect people with the right care wherever and whenever it's needed. Empower people with insights that inspire and accelerate better health decisions. And foster clinical collaboration that leads to higher quality care. Our vision is to make virtual care the first step on any healthcare journey. Because health is personal, our commitment to improving it is personal too. We're on a mission to empower all people everywhere to live their healthiest lives by transforming the healthcare experience. Telehealth, better health made possible.
While they got a significant, noticeable COVID boom, which actually has pushed their valuation to a very high point, and to be quite honest, I think that it's a little bit outside what they might actually be worth right now. This is a company that I really believe can grow into the evaluation, so I would not be surprised if it was choppy for the next 6 to 12 months, but if they continue to do what they're doing, 2, 3, 5 years down the road, I can see this being a really big player in the online care space. So before purchasing into the stock, I obviously wanted to see kind of what the market was like for this company. So I did do a bit of research. Business Fortune Insights did a bit of a research article on it to see market cap. Granted, this was pre-COVID. So they said roughly the market in 2019, $61 billion, projected to reach about $560 billion by 2027. I imagine that this 2027 has been significantly pushed up due to COVID, probably by at least a few years. And I would also imagine that this $559 billion has increased in terms of market size since then. All that bodes well. So as far as what Teladoc does, the video kind of covered it. Basically, they're really part of the online telehealth service, right? They're part of a holistic approach. They've got the primary 360, which basically is a full encompassing service when it comes to telehealth. That one's obvious. Mental health services, that's a big one. Very huge growing industry down in the US as people start to get more aware of mental health. And a lot of people are also pushing mental health, right? They're trying to create awareness for it. So this is going to be a huge service for them going forward. Chronic care, and the rest. One thing here that's actually super interesting to note that they put here, they merged with Livongo middle of last year. And if you're not familiar with Livongo, they are a company that does or uses, AI to research for chronic diseases such as diabetes. The market actually didn't really like this at all. If we take a look at Teladoc's stock track record last year, Last year when it did the merger was around this point here. You can see a significant decrease coming down. Market didn't like it at all. And I think since then, they've kind of rebounded a little bit. But I find it surprising because I think that these two companies actually synergize very well together. And I wouldn't be surprised if Teladoc starts taking a lot of the info and research done through Livongo and incorporates it into their telehealth service. Going back to the portfolio, I've also initiated a few more starter positions: Tencent Holdings, Zillow, and Salesforce. These are all a couple of new starter positions that I've added into, and I will probably add to it as I grow my portfolio. If we flip over to the coin flip one, this actually has been a little more boring. I haven't added any new positions as far as, brand new stocks. I have topped up a couple things. Fubo, I've topped up. The sports streaming betting company, hopefully in the future, and Palantir I've also betted up, or topped up as well, which actually they have a really great Friday. I wouldn't be surprised if that pulls back because that went up like crazy on Friday. So with the 2250 that I contributed, I'll be initiating a couple different new positions in the growth portfolio and one that I've got my eye on in the coin flip portfolio. All right, so now onto some financial news. Well, the biggest thing that's happened over the last couple weeks is, of course, the U.S. presidency. Joe Biden, he obviously won the election. There was a whole rigmarole about election fraud and all that stuff. And then there was a huge vote for the Senate, which the Democrats won 2 key seats in Georgia. Why does that have a huge issue on stocks? Well, what it allows to do is it allows for Biden to potentially get a lot of what he was campaigning on across, because now they have the votes required in both the House and the Senate. Not super interesting. But when it comes to stocks, it is really interesting, because what that means is if he's able to get a lot of his goals or campaign promises across, then that affects a lot of the markets in the States in terms of sectors. As you can see, if we go over some of his platforms, coronavirus, national testing. What does he want to do with the coronavirus? He really is pro-testing and tracing. What happens? If we look at one of my coin flip stocks, which is Fulgent Genetics, you can see. So he's really pro-testing and pro-tracing. What does Fulgent Genetics do? It starts to explode upwards because this company is all about genetic testing and trace testing. They do a lot of work with COVID-19 as far as testing for positive and negative. So you can see that that's a huge boon for the stock. And this, if we go down, he wants to raise minimum wage and invest in green energy. Green energy is another industry that has been completely booming ever since the Senate was flipped. So if we look at any type of green energy stock, obviously Tesla is a huge green energy stock. I mean, it was soaring before that, before any of the Senate stuff mattered. But if we look at this, clearly January, huge boom, and it's gone up since then. Another very popular green stock, we've got SolarEdge stock. Now they had a large decline because Tesla recently announced that they'd be building their own inverters. But you can see when these news is announced of Biden flipping control of the Senate, like they're going through huge booms upwards. Now another one here, if we look at, he talks about race, criminal justice reform, grants for minority communities. Biden is very much pro, or he has a speech where he wants to invest in police to help with all this and invest in police technology. What does that do? If we look at a company that's hugely focused in police technology, we have Axon. This stock has just been non-stop, steadily going up. 120 just around January, and now we're already up to 170. That is a 30 to 40% rise. I actually do really like this company as well, and sooner or later you'll probably see this stock in my growth portfolio. I'm still trying to find an entry point, and I can't seem to find one because all it does is go up. There may come a point where I just say screw it and I initiate a small position, but that remains to be seen for now. So essentially, what the point is, politics, while boring to some, they can really impact the market. And something as huge as the U.S. election certainly impacts the market. If you're looking for a place to invest, while when the news comes out, of course, all these industries will already boom right away. Investing is not a sprint; it's a marathon, right? And all these types of issues, climate change, foreign policy, health, immigration, these are always going to be key factors for every person who wants to be president. So I think it's really important to pay close attention to stuff like this. And then you can put your money in these industries, right? It's still really important to find good companies in these industries, but at least as a starting point, you can kind of know where to look, and then you start and filter out from there. If you don't want to do all that work, you can certainly always just buy an index or an ETF. As I've stated before, I don't think buying stocks is for everyone, and I don't think, you should only solely be buying stocks. To get started, I don't think there's anything wrong with buying a mutual fund or an ETF portfolio. I still have a lot of my funds, especially my retirement funds. Those are all in stuff like ETFs and mutual funds. This stock trading portfolio is kind of my non-registered account, which hopefully it goes well. But I still do have my own portfolios diversified out into different types of products and industries. Last but not least, we have the Canadian portion, which obviously has come down quite a bit since the last update. Canadian National Railway and the other two companies, although they're pretty much flat. Canadian National Railway really being the big fluctuator between the last couple weeks. No change in my belief in the company, though. If anything, when I add next month, I might pop in a little bit more funds into this company. I think it's really positioned well for the long-term future, so not worried at all. And as you can see, not a big difference in terms of market value and total cost. We said it was about a 1% increase, so not a big difference. I've got about one probably stock in mind for next time that I might go over, because I'll probably have added it to my portfolio by then. Alright, so thanks for watching, guys. If you liked it, leave a like. If you want to sub, that would be awesome and much appreciated. Otherwise, I'll chat with you guys next time.